What if I told you the next trillion-dollar investment opportunity may not be another AI software company? What if one company could profit from almost every major artificial intelligence breakthrough without building a single chatbot? Think about it. Every AI model, every data center, every cloud server, every supercomputer needs one thing: electricity. And not just a little, an enormous amount of it. As artificial intelligence continues expanding, the world's demand for electricity is growing faster than many experts expected. Some investors believe this could create one of the biggest investment opportunities of the decade. And one company keeps appearing in that conversation: GE Vernova. Some investors believe it could become one of the biggest winners of the AI infrastructure boom. Others believe the stock has already risen too much. So, who's right? And more importantly, is GE Vernova stock still worth buying in 2026? Stay until the end, because one overlooked business inside GE Vernova could become even more valuable than most investors realize. It may also explain why some of Wall Street's largest institutions continue watching this company so closely. Let's begin. 1. Why everyone is suddenly talking about GE Vernova. Artificial intelligence is changing the world, but AI cannot exist without electricity. Every search, every AI-generated image, every cloud application, every large language model runs inside massive data centers. These facilities consume enormous amounts of power, and demand continues rising. Technology companies are investing billions of dollars into expanding AI infrastructure. But building new data centers is only half the challenge. Someone must generate the electricity. Someone must modernize the power grid. Someone must build the equipment that keeps energy flowing reliably. That is where GE Vernova enters the picture. The company operates across several parts of the energy industry: power generation, grid technology, wind energy, electrification solutions, energy services. Instead of focusing on one technology, GE Vernova participates across much of the electricity ecosystem. That diversity has attracted attention from long-term investors. Because no matter which energy source grows fastest, reliable infrastructure will always be necessary. But this company did not appear overnight. Its story began much earlier. And understanding that history helps explain why investors are paying attention today. 2. More than just another energy company. Many people hear the name GE. They immediately think of one of America's oldest industrial companies. That reputation still matters, but GE Vernova is now focused on something very different. Its mission centers on helping produce, deliver, and manage electricity more efficiently. The company supplies advanced gas turbines, grid equipment, wind power technology, software solutions, and long-term maintenance services. Its customers include utility companies, governments, independent power producers, large industrial businesses, and increasingly, companies supporting AI infrastructure. One important advantage is experience. Building power infrastructure is not easy. Projects often require years of planning, billions of dollars, strict engineering standards, and long-term customer relationships. New competitors cannot simply appear overnight. That creates barriers to entry. And barriers often matter to investors, because companies with strong competitive positions may enjoy long-term opportunities. But there is another reason Wall Street continues watching GE Vernova. Its business benefits from several global trends at the same time, and that combination could become extremely powerful. 3. The AI electricity boom could change everything. Artificial intelligence is creating a challenge that few people discussed just a few years ago: power demand. Every new AI data center consumes enormous amounts of electricity. Some facilities use as much power as entire cities. Technology giants continue investing billions. New AI infrastructure is being built across the United States and Canada. Utilities must expand generation capacity. Power grids must become stronger. Transmission systems must carry more electricity. This is where GE Vernova could benefit. The company provides gas turbines, grid technologies, power conversion equipment, digital energy solutions, and long-term service contracts. As electricity demand grows, demand for reliable energy infrastructure could also increase. Many analysts believe this trend may continue for years. That is why some investors no longer view GE Vernova as just an industrial company. They see it as an AI infrastructure company, and that change in perception could become very important. But AI is only one growth driver. There is another opportunity that may be even larger over the next decade. 4. Grid modernization is a multi-billion-dollar opportunity. Much of North America's electrical grid was built decades ago. Today, the world is very different. Electric vehicles are increasing. Renewable energy continues expanding. Artificial intelligence requires more electricity. Population continues growing. Old infrastructure must be upgraded. Governments, utility companies, and private businesses are investing billions of dollars to modernize power grids. GE Vernova supplies many of the technologies needed for this transformation. Advanced transformers, grid automation systems, high-voltage equipment, digital monitoring solutions, power management software. Modernizing the grid is not a one-year project. It could take decades. That creates long-term demand. Long-term demand often leads to recurring business opportunities. And recurring business is something investors always appreciate. But there is another part of GE Vernova that many investors overlook. Its service business. 5. The hidden business that could drive long-term growth. Selling equipment is important, but servicing that equipment may be even more valuable. Power plants require regular maintenance. Gas turbines need inspections. Components must be replaced. Software requires updates. Performance must be optimized. Utilities cannot afford unexpected shutdowns. That is why long-term service agreements are so valuable. Once equipment is installed, customers often continue working with the same provider for many years. This creates recurring revenue. Recurring revenue helps reduce dependence on new equipment sales. It also makes future cash flows more predictable. Wall Street often rewards companies with stable and recurring income, because predictable businesses are generally easier to value. This service segment could quietly become one of GE Vernova's strongest competitive advantages. But no company operates without competition, and investors should understand exactly who GE Vernova is competing against. 6. Competition is strong, but so are the barriers. The global energy industry includes some of the world's largest companies. Competition is serious. Many companies manufacture turbines, grid equipment, renewable energy systems, and industrial technology. Winning contracts is never easy. Customers demand reliability, efficiency, safety, and decades of proven performance. Price alone is rarely enough. Experience matters. Engineering expertise matters. Global support matters. GE Vernova has spent decades building relationships with utilities and industrial customers. That reputation cannot be created overnight. Large infrastructure projects also involve strict regulations, complex engineering, and significant capital investment. These factors create high barriers to entry, which means fewer companies can compete at the highest level. That does not eliminate competition, but it gives established companies an important advantage. Still, every investment has risks, and before deciding whether GE Vernova deserves a place in your portfolio, we need to examine the biggest challenges investors should never ignore. 7. The bear case. Now let's look at the other side. No investment is risk-free, and GE Vernova is no exception. The first risk is valuation. When a company becomes one of Wall Street's favorite stocks, expectations rise quickly. If future earnings fail to meet those expectations, the stock could fall sharply, even if the business remains healthy. The second risk is project execution. Many of GE Vernova's contracts are large, complex, and long-term. Unexpected delays, higher material costs, supply chain disruptions, or engineering challenges could affect profitability. The third risk is economic uncertainty. Power infrastructure projects require enormous investment. If interest rates remain high, or the economy slows significantly, some customers may delay large projects. That could temporarily reduce new orders. Another important risk is government policy. Energy markets are influenced by regulations, tax incentives, environmental rules, and public spending. Changes in these areas could affect future growth. Finally, competition never stops. Large global companies continue investing heavily in power generation, grid technology, renewable energy, and digital energy solutions. GE Vernova must continue innovating, delivering reliable products, and maintaining customer trust. Smart investors always study both the opportunities and the risks. That creates a balanced investment decision. 8. Why institutions continue buying infrastructure companies. Many retail investors focus only on exciting technology companies. But institutional investors often think differently. Instead of asking, who builds the next AI model? They ask, who supplies the infrastructure behind it? Artificial intelligence cannot operate without electricity. Reliable power generation, modern transmission networks, advanced grid equipment, and long-term maintenance. These are businesses that may continue growing regardless of which AI company becomes the biggest winner. That is why infrastructure companies have gained increasing attention. Many pension funds, insurance companies, and institutional investors prefer businesses with long-term contracts, predictable demand, and essential products. Electricity is not optional. Modern economies depend on it. As AI expands, electric vehicles increase, and digital infrastructure grows. Reliable energy systems become even more important. This long-term trend is one reason many investors continue watching GE Vernova closely. But one final question remains. Should beginners consider buying this stock? 9. Should beginners buy GE Vernova? If you are new to investing, do not buy a stock simply because it has performed well recently. Instead, ask yourself 3 simple questions. Do I understand how this company makes money? Do I believe electricity demand will continue growing over the next 10 years? Can I stay invested even if the stock becomes volatile? If your answers are yes, GE Vernova may deserve further research. If your answers are no, there is nothing wrong with waiting. Successful investing is about understanding businesses, not chasing headlines. Many experienced investors build diversified portfolios. They combine ETFs, dividend stocks, blue-chip companies, and carefully selected growth stocks. This approach helps reduce risk, while still providing exposure to long-term opportunities. Now, let's answer the question you have been waiting for since the beginning of this video. 10. Final verdict. So, is GE Vernova stock still worth buying in 2026? The answer depends on one important question. Do you believe the world's demand for electricity will continue increasing over the next decade? If your answer is yes, GE Vernova becomes a very interesting company. Artificial intelligence continues expanding. Data centers continue multiplying. Electric vehicles continue gaining market share. Power grids require modernization. Utilities continue investing in reliable generation. These are not short-term trends. They could shape the global economy for many years. GE Vernova is positioned where many of these trends meet. Power generation, grid infrastructure, energy software, long-term service agreements, and electrification. That combination gives the company multiple opportunities for growth. However, investors should also remain realistic. The stock will not move upward every month. Large infrastructure companies experience cycles. Government policies change. Energy markets evolve. Competition remains intense, and quarterly results can sometimes disappoint even when the long-term story remains intact. That is why patience matters. Many of the world's best-performing investments required years, not weeks. The most successful long-term investors usually focus on business quality, competitive advantages, strong management, healthy financial performance, and long-term industry trends, not daily headlines, not social media excitement, and certainly not fear of missing out. One more point deserves attention. Many investors view AI as a software revolution. But software alone cannot power artificial intelligence. Behind every AI breakthrough, there must be reliable electricity, modern power grids, advanced turbines, transmission equipment, and the companies building that infrastructure. That is exactly where GE Vernova operates. Whether it becomes one of the biggest winners of the AI era remains uncertain. But it has positioned itself in an industry that could benefit from one of the strongest long-term trends of this decade. No one knows exactly where GE Vernova stock will trade next month. or even next year. But investors who study businesses carefully, understand the risks, remain diversified, and think long-term, often make better decisions than those who simply chase the hottest headlines. If you enjoyed this analysis, subscribe to Wall Street Pulse. Every week we explore the biggest investment opportunities shaping the future. Artificial intelligence, energy, infrastructure, dividend stocks, growth stocks, ETFs, and the companies transforming the global economy. Before you make your next investment decision, remember this: the companies creating the future are not always the ones making the headlines. Sometimes, the biggest winners are the businesses quietly building the foundation that makes everything else possible. Thank you for watching. We'll see you in the next video.